Hooty hoo, all my stock market gamblers. Welcome today. I'm so glad you're here. I'm Tall Mike and we got Fed Day going on. So what's going on in the stock market before the Fed announcement? Well, the market's kind of flat, just waiting for the Fed. Dow's down about 50. NASDAQ, S&P kind of flat. The Feds, they're the ones that are going to move the market. Now, which way is the market going to move? Well, I guess time will tell. What's the Fed going to do? They're going to raise by a quarter basis point. Now, why are they going to raise by a quarter basis point? Well, they got to pretend. They got to pretend that they're fighting this thing called inflation. But we know they're not fighting it. They're the ones causing it. Printing another $2 trillion, that causes it. But they got to look strong. They got to look smart, right? So they'll come out, raise it a quarter basis points. So which way will the markets move? My guess will be initially probably try to push it up a little higher. Look at the S&P. It's really, what's it at? 4,000, right? Okay, so it's sitting right on its 50-day moving average, which is usually resistance. Now, I think they're going to try to push it through that, maybe get closer to the 4,100 before we come back down. But this whole month of March, we just been going sideways. Really, we're right where we started the month. We went up a little bit, came down a little bit, right back to where we started. 3 weeks, the market hasn't really gone anywhere, but it's going to go somewhere soon, and I do think that's going to be a downward direction. Now, today, we may get a little bounce above that 50-day. I don't think it's going to hold there for more than a day, but they're going to try to push it up again. Maybe we get to 40.50, maybe 4,100 before we start coming down. That's my take. Your take may be completely different. Let's get over to the real estate market now. Okay, so the real estate market, you got to love these articles, you know. They got these spin doctors, right? Because they come out and they say, like, look, it'd be between January and February, the existing home sales went up by 14%. This is an increase in volume by 14%, meaning everybody's buying, so you better run, hurry up and jump in. Went up 14%, right? Well, it's a normal move. Normally between January and February, sales do go up. That's just a normal seasonality of the business, right? But here's what they're not telling you. Between February and February, we're down still about 30% year over year in sales volume. That's not in prices. Now, prices usually follow sales volume. So I do expect that these prices will start to come down quicker, faster. But, you know, there is still a lot of crazy stuff going on. I get people that get discouraged. You know, they say, Mike, it's not crashing quick enough. Well, real estate doesn't crash quick enough. Leave that for the stock market. Stock market's going to crash very quick when it happens. Not ready to happen yet. But the real estate market is coming down 20% in many metro areas. But there's still crazy stuff going on out there. Look at, there's sellers on the marketplace right now, and the days on market are starting to get longer and longer. So there, these homes that are sitting now, they're sitting, 30 days, 60 days, they're not selling. And well, the seller, they don't want to lower that price. Now, maybe some of them can't because they're already underwater and they can't lower it anymore. And others, they don't want to because they want to get what Billy Bob got. They don't want to look stupid. Billy Bob sold a year ago and he got 10%, maybe 20% more than they're going to get. So they don't want to lower it anymore because then they look kind of dumb. So there's the stubbornness of the sellers right now. And I get that. That's kind of, a little bit crazy to me. But there's going to be a rude awakening, Once the sellers realize the direction of the market's going to continue downward, they're going to wake up all at the same time. They're going to start dropping their prices. And they're going to be competing against each other to see who can drop their price the quickest. Well, the rude awakening's coming, right? But there is still crazy stuff going on. Some investors have jumped back into the market. Some investors are buying right now. I mean, they're buying, some are all cash, and the reason the all cash ones are buying right now is they want to get their cash out of the banking system. They don't feel safe there. So they take the cash out of the banking system and put it into real estate. You go, but real estate's going to come down another 20 or 30%. They say, that's okay. I'll still have the house. If I leave the money in the bank, they may take it all. The banking system may come down. People are afraid, so they got to put their money into hard assets. I I really don't blame them on that. But I think if they could just, pull the cash out. But these are people with millions and millions of dollars. They don't want to put that under the mattress. They got nowhere to store it. So they're storing the cash in real estate. And I sort of get that. Now, some people are buying with, these 7% mortgages. And then they're renting them out. But the problem is they can't rent them for high enough to make their payments. So they're running negative cash flow month after month. And how many months do they want to do that? I don't know. But to me, that's a little bit crazy, right? But maybe they think the houses will bounce back up. Maybe they think that's the plan. But to buy a house with 7% mortgage and they can't find the renter up here, so they're still sitting vacant. Some of them, a lot of vacant homes right now. They can't find tenants to come in and rent at the high prices that they need to get close to making their mortgage payment. But they can't. So they're going to continue to lose money month after month. And to me, that's a little bit crazy too. So there is some crazy stuff going on right now. But this real estate market, it's just going to come down. Look at, so far just this year, we've already had about 500,000 jobs. Layoffs, announcements, right? I mean, what came out? Amazon comes out, announces another 10,000. Then they already announced 20,000. I think they're up to like 30,000. Disney came out, 7,000. Everybody comes out with all these job losses. This is not good because these are the high-paying jobs. Look at Amazon's they're not laying off the delivery driver that comes and puts the package at your door. They make $20 an hour. They're not laying those. No, they're laying off the ones that are making $200,000-300,000 a year, getting rid of those because they see the recession coming. They have to cut costs where they can. So the layoffs are happening, about 500,000 so far. I think by the end of the year, there'll be about 2 million just this year, just in 2023. Now, that's going to be a little problem for the housing market. People, oh, but Mike, there's no inventory. It's going to be fine. Well, it may be in your area. And I get that. That's perfectly fine. Now, what's interesting to me is credit cards. Now, in the last couple of years, credit card interest rates have gone from about 16% to over 20%, 21% in most of them now. That's a lot of interest rate increase. So you think people would be using the card less? No, they're using it more. Credit card volume is up 18%. We're almost at $1 trillion. $1 trillion in credit card debt. Now, why are people putting everything on a credit card? Well, it's pretty simple. They don't have money. They don't have any money. So that's a problem, right? I mean, there are people out there still not paying their rent. There's 5 million of them. Over 5 million people still not paying rent, haven't paid for years. The eviction process is starting to come, and they're going to be evicted eventually, but they haven't paid. 5 million of them. Now, people behind on their mortgages right now. 1.5 million of those, 1.5 million people behind on their mortgage payment. Now, isn't that a little strange? Well, why don't they sell? Well, they feel that prices are going to go up. Maybe things will get better for them, and they'll figure a way to pay the mortgage. But there's going to be some forced selling coming onto the marketplace. This is not going to be good for real estate. I'm telling you, it's not. It's just not. Now, the auto industry is fascinating to me, right? Okay, so the auto industry, they're people going in to try to buy a car, right? But the rates, they've gone up. Just like a mortgage rate has gone up, the rate to buy a car has gone up. So they're getting turned down over 10%, about 10% of them getting rejected. That's a high number for rejection in the auto industry. They want to buy a car, but they can't because they don't have any, they can't afford the payment. The payments have gotten too high, so they're getting denied. Look at the whole credit system is starting to freeze up. You're going to see this in the mortgages. Look, at the mortgage rate may stay right at 7-8%, but they're not going to be giving them out. You're going to need an 800 credit score. You got 750? No, you're going to be denied. There's going to be a lot of denial. The system's starting to tighten up, and this is a problem. You see, these bank bailouts, yeah, they're going to print trillions and trillions of dollars to bail out these banks, but there's a problem with this. What this does when the bail out the banks is it decreases your purchasing power. Your purchasing power is going down and down and down because of the bank bailouts. And the credit tightening is because of the bailouts. Look, the banks are in trouble. They're insolvent. They don't want to make loans anymore because they're afraid. And they're afraid for a good reason, because a lot of people can't pay the loans back. All right, so that's a problem. Now, a lot of people ask me, well, Mike, I just really want to buy a house. I can't afford a house. I'd like to buy a house. What should I do, Mike? Well, you see, here's where it gets crazy now. I mean, you can turn off your switch channels right now. This is going to get a little crazy. People aren't going to believe what I'm going to be telling them here. Look it. There's going to be a shift, and it's going to be a big shift. This system of financial stability is getting ready to come down. The banks are insolvent. We have to print trillions of dollars. Okay, well, you go, Mike, let's say we print 20 trillion, we give it to the banks. Everything will be fine, right? Well, no, it won't be fine. You see, there's all these derivatives. The derivatives are in the quadrillions. There is no way the government can print enough money to make everybody whole. This thing's going to come down. Now, will it come down tomorrow? No. Maybe we got a year left. Maybe we got 2 years left. Hopefully 3. But what I am doing, what I do, here's what I do. Okay, I buy stuff that's not in a bubble. Houses, the biggest bubble you've ever seen right now, okay? What's not in a bubble right now? I'll tell you what's not in a bubble is silver. Gold's not in a bubble. It's not at all. Look it. Here's what happened. Here's what happened in the 70s. Okay, the 70s, we had this thing called inflation. You may have heard of it because we have it again. We got inflation again. Inflation's running wild. And you haven't seen nothing. You keep printing this money. That inflation number is going to take off. But what happened to gold and silver in the 70s? Well, gold went up 25 times. 25 times. 25x. You know where that'd put gold today? That'd bring gold to about 50,000 an ounce. Now, I do believe that gold will become 1-to-1 with the Dow. Dow, what's it at? 32,000? Maybe gold doesn't go to 32,000. I actually believe the Dow could come back down to 6,000. It could get down that low. Wouldn't that be wild? Oh, that'd freak a lot of people out. But I think it's going to become 1-to-1 with gold at some point. Okay, that's crazy, right? Mike, you're just talking crazy stuff today. Well, what did silver do in the 70s? Silver went up by 40 times. 40 times. I mean, that would put silver around $800 an ounce. Mike, you're just talking ludicrous now. That is never going to happen. I'm telling you, switch the channel if you don't want to hear this stuff. But I believe that 500 ounces of silver will buy the average price house. That's correct. The average price house will be bought for 500 ounces of silver. What's the average price house today? It's about 400,000. I'm using rough numbers. Well, and what's silver at? Well, $22 an ounce. Well, for 500 ounces, wouldn't silver have to go to, well, let's think, about $800, right? If it went to about $800 right now, 500 ounces would buy you that average price house. It would buy you the $400,000 house. Well, people go, Mike, silver can't go to $800. And maybe you're right. Maybe the house is going to come down, and maybe the house is going to come down a lot. There's going to be a shift in this system. Now, you young people, you're not, I get this. You haven't seen it before. I've lived through the 70s. I've seen the shift. The shift is dramatic. It transfers wealth. What it does, it transfers the wealth. In this case, it'll transfer the wealth from the people holding stocks, from the people holding, the houses, into people that were smart and, they stuck away. 500 ounces of silver. You can get 500 ounces of silver. Let's even say silver's at $30. What is that? 500 ounces cost you about $15,000. $15,000. Now, if I'm wrong, what do you got? You got $15,000 worth of silver. Okay. Is that terrible? Well, you can always sell it. I think you'll be able to get your money back. Maybe I'm wrong. Maybe silver goes to zero. It's never done that in the history of the world, but maybe someday. But no, silver's going to to be valuable because it's used for everything. Used for making electric vehicles, used for making solar panels. It's used in industry everywhere. And it's trading right now about $22 an ounce. Now, let's say I'm right. Let's say I'm right that house has come down by 50%. And let's say silver has a huge rally, a massive rally. Not like in the 70s where it went up 40 times. Let's say it only goes up like 20 times. Okay, let's say it goes from like $20 to $400, but that house comes down to $200,000. That would be 500 ounces of silver will buy you the average price house. I know I'm talking crazy today. I get that. And I don't expect anyone to believe this, okay? But this is just what I'm doing. I'm buying things that are not in a bubble. I'm getting out of things that I know are in a bubble. I know houses are still in a bubble. You can tell me they're not. Dave Ramsey will tell you they're not. Barbara Cochran, they'll tell you they're not. It's a great time to buy. Get out there, be the bag holder. I don't want you to be the bag holder. If you want to be the bag holder, you can, but I don't want you to. Maybe I can help someone here. I don't know. Maybe I'm dead wrong. Maybe I am just a crazy old guy that likes to buy these shiny rocks, these gold and silver. Maybe, but maybe I'm a smart guy. Maybe I'm right. Maybe you'll see that someday and maybe you'll send me a thank you note. I don't know. Anyways, if you like this stuff, give me the thumbs up. Why not? It's Fed Day. What's going to happen? Coming on in about an hour. Get out there. Have a great day, everybody. We'll talk again real soon. Bye-bye.